Let's talk to Jeremy Stretch. He's the head of G10 FX at CIBC. Very good morning to you, Jeremy.
Good morning, Nick.
Right, the ECB. This time last year, euro dollar was 103. We're now at a 123 handle. Quantitative easing. We've halved this year. September's a key date in my diary now. When we went to school, in our economics lessons, we didn't do quantitative easing. We didn't do negative interest rates. Okay, are the market fearful enough of how this could all play out? What would you be telling the markets if you were Mr. Draghi?
Well, I think there is a lot of uncertainty as to how this process will unwind because, of course, as you quite correctly say, we are in relatively uncharted territory. We're obviously starting to embark on a policy reversal in the US, but we're seeing, obviously, the ECB starting to adjust their policy perspective as well. You mentioned about that September date in your diary. Well, I think probably the date in your diary needs to be brought forward a little bit because, of course, it's when the ECB make noises about what they're going to do after September, and that probably will become in the March to June period. So I think that's going to be the much more appropriate one. But I think in the context of the euro's valuation, I think there was far too much negativity priced in this time last year because of the political risk. We didn't buy into that, and we thought the euro would appreciate significantly, and that proved to be a correct assumption.
Yep.
I think the question is how much further can it go from current levels? And I think it can go higher, but again, I think it is a concern that we've moved a little too far too quickly, and I suspect the ECB will make reference to that in the short term as well, because of course in September, when we'd seen a significant appreciation in the euro against the dollar of something in the region of 6 to 7% in the preceding 2 months, similar to what we've seen in the last couple of months, the ECB pushed back against that. Not because of the absolute levels per se, but because of the rate of appreciation. And I think that's what the ECB will try and do this time around, just to rein in a little bit of the expectation of a significant tightening in monetary conditions via the currency.
So where do you see euro dollar year end?
Well, I think euro-dollar will end the year higher, but I think it is going to be the case of not anticipating and again extrapolating the trend that we've seen over the course of the last couple of months. So I wouldn't be surprised if we're getting closer to what I would call an equilibrium value in euro-dollar. And that equilibrium value, I've just recalibrated my models in the last 24 hours or so, and that equilibrium model value is now almost 130.
Right.
Now, I don't think we will end there, but I think we get in that sort of trajectory towards the end of the year. So I think the euro is still providing a competitive tailwind for the Eurozone economy. The growth numbers are stellar. I think that's going to be an increasingly difficult balancing act for Mr. Draghi to underline because the growth dynamics are so positive. So I think we will see the positive flow through in terms of the euro valuation still persisting throughout the year, and I think that will encourage continuation of the growth trajectory and allow the euro to gradually appreciate through the course of the year, with obviously the ECB pushing back in the short term, but appreciate across the year to the upper 120s.
Jeremy, as always, thank you very much.
Thank you.